All right. What is it? The 5th. Thursday, the 5th of December. We got a live stream here for you folks. If you can hear me fine, you see the picture fine, we're looking at Apple. Austin, I'm with you, man. The tides are about to turn, which is a good thing because it's much needed to get some rationale here. But we're looking at the Apple 3 minutes chart. Let's go right away here, folks, because first thing, of course, I'm looking at the VIX. The VXX, of course, the short-term, really short-term futures, which is important sometimes to look at. It gives you a little bit of a better perspective than the actual VIX. But bottom line is, you see that trend that begins to build here. Yesterday we said, hey, the VIX is showing signs of life. And now we see sort of a positive trend, something that we haven't seen in a while, right? It's just a negative. Now we're changing a little bit of that. No guarantee that it's going to last or it's not going to change back into negative. But for now, it is at least offering a little bit of a challenge to the market. VIX beginning to move higher above the number that we talked about. So if we look at the hourly chart, do we have the bull flag playing out? Yes, we do, right? So first thing that comes to mind is Apple. Apple showing up maybe here if we look at the daily chart. This is excessive. Doesn't make sense at all. We need to shave at least half of this recent move. So the trade that we talked about yesterday, you may enter, as they say, right? You may enter. And in this case, it'd go to the 240 and 235. That should do the job here. But 110, you cash in about $400. I mean, come on. That kind of risk versus reward doesn't exist anymore, except with the low VIX, and that's not going to last for too long. Now, you can do something a little bit cute if you'd like. You can do something like the put butterfly. You don't need to go to the 20th, though. You can go to the next week if you'd like. And here you do the 240, you sell the 235, and then you buy the 230. There we go. You're spending about 60 to 70 bucks to make 400. I think I'm going to get in both, right? I'm going to get in this one because this was more of a lotto. Then get it the 240, 235 for December 20. And see what happens. But this is as good as it's going to get in entry for a pullback trade. And the VIX is moving higher overboard our size, so it makes sense to get into the Apple puts here and take a shot. The other name that is really sensitive to the VIX is NVIDIA. And NVIDIA, I mean, it tried to rally in the morning. If you look at the 1 minute chart, it tried to give it a shot, but it came back down. And in the daily chart so far, it is stalling. But if we try to come down here, and if we cut below 142, folks, I think that NVIDIA is printing a lower high, and it's heading back to the lows here. So it's critical how it's going to behave. I don't think we're going to get the resolution today, maybe tomorrow after the jobs data. But it is notable that just a little bit of move higher in the VIX, and we see things beginning to move the other way. You see it also in the stuff that went insanely high, like the IGV stuff, the CRMs and the likes that went insanely high yesterday. So you see CRM pulling back a little bit. Marvell, same thing. Pulling back a little bit today. Let's see here, about 3-4%. A lot of this stuff like Spotify also pulling back nicely today, finally, but 2.5. But I mean, look at this guy, right? So there's a little bit of, you introduce a little bit of volatility and you see amazing things happening. They begin to book profits right away. So you look at Datadog here. They're taking profits from Datadog too, a little bit to a certain degree. So Datadog is down about 1.25. But you get the point here. We've introduced a tiny touch of volatility. We see certain names. There are downgrades, of course, like AMAT caught a downgrade today, and that's hurting the name. You look at what's working. The airliners. The hell is going on with the airliners? You got American Airline going higher, raised Q4 earnings, strong travel demand, which contributed to nearly 7%. Okay, so here you have some good news from American Airlines, and all of the airlines are going higher. I think it's a gift to short, to be honest with you. Not right now, but at some point you look back at it as a gift to short, because airlines are not going to last in this economy for too long. It's just a bunch of rich folks buying the seats and traveling all over the place, and that's keeping the airliners afloat. But anyways, you see some of these moves here because of the VIX. What about the dollar, though? Dollar components, because we've been seeing divergences. So the dollar goes down a little bit, but you're not seeing anything showing up here in gold futures. Actually, it's setting down. The SLV not doing much today. Copper not doing much. So there's sort of a hesitancy that I'd like to see the big macro data that will influence the dollar come out first, which is tomorrow's jobs report. And if the dollar goes down, then I think gold is going to move, metal is going to move, the future is going to move, and vice versa, of course. If there's, let's say, a hot jobs number, or we see the dollar going higher, you'll see all of them going down. So for now, the dollar cohort, we can't do anything about it until tomorrow. But I'm thinking about straddle trades, folks, because I think that we could see a break tomorrow. I think about straddle in gold. I'm thinking about, if you do a straddle, you're probably going to do it in GLD or GDX. GDX is probably going to be better because it's higher beta. And you'll do it too in this guy right here. So yields, I love to look at the 30. You guys know that. So the 30 is still holding here, but not definitive, not giving us anything. And the IWM, of course, I think there's a big move coming tomorrow, folks. Either it's going to be that this is going to be a bull flag that's going to break to the upside, or it's going to be, if we plug in the 20 days moving average, and you see it better in the Russell futures, we're just going to break below the 20 and flush down, and you combine that with the J and K. What we talked about in the beginning of the week, you realize that whatever market pop we got this week was just flimsy and was not validated at all. But again, we don't want to jump the gun here. How do we do a straddle trade for tomorrow? I mean, we can do something with a proxy like the TZA. No need for this guy here. So suppose it's just a lot for tomorrow. You want to go with in the money, 10.5, and then we buy the call, 10.5, spending 50. And if there's a big move, 3% or more, you're flipping those into profits. Not my favorite. I'd rather go with the IWM because the volatility is down, so I might as well take advantage of that. 239, let's call it 239. There we go. A little too expensive though for if I'm going to do a straddle like this, might as well give it another week. And the idea is we see a bigger break to the 3% tune, but this is a little too expensive, folks. So we're going to play with these by probably selling spreads on them. So it's going to be something like this. You sell a call at 245. Let's move these to 40s here. 40, 40, 45, and then sell the 235. That way, you're giving the trade a little bit of a chance to, I mean, you see the profit 62%. So spending about 380, 385, you're not making a lot of profits, but again, it's more of a conservative trade that is directional, and then you can expand on that. Once you open up the path where we're going to go up or down, you can make more trades, but this is going to be pretty much guaranteed in the bag that you'll make something out of it. So we'll think about this before the close and do something about the IWM. XHB really quickly, that's another yield sensitive. That's heading down, now broke. I think it broke the 50, right? So the 50, next up would be the 100, about 117. So we go back to the same trade that we've done before. 120, 117, put spread, XHB, here it is. But you got to remember that it's an important day tomorrow. So there's a little bit of speculation here. And either it's going to pay big or you're going to get whacked if there's the opposite move happening. So let's do here. The 120, 117. Spending 129, 130, depending here on this, to make 170. Not the best risk versus reward, but it also has a really good chance of profitability, right? 44%. So nothing to sneeze on. And you're going to see these, right? 44% is really good in options trading. You're going to see a lot of these because the implied volatility is down across the board. But as the volatility comes back up, the chance of profitability becomes lower and lower and lower. Anyhow, let's look at some of the big cap components really quickly here. So Apple, I'm confident that today's a good day to open these puts, and you see Apple already flushing down. So as we speak, trade is already on. Microsoft, if we look at the daily chart, any update here? Microsoft closed the gap, but it's stalling at the same point. Let's look at the Bollinger Bands. Yeah, I think Microsoft is still strong, right? Microsoft is not overbought. I leave it alone for now. Of course, if they pull back altogether for the most part, but not my favorite here for the short. I think Apple is a better one. If we look at Google here, see what Google is doing. Yeah, Google has been weak, and I just don't get why people are buying it. This is here, double top. You have a lower high. You break below the low of this candle right here, which is a breakout candle. I mean, close below the 20 will be as close as confirmation as you can. Then you have a lower high. We're going to go back to the lower bands. So in this case, we're going to go back to the same trade that we've done before in Google. So September 20th, it's going to be the 170. And we sell here the 165, spending $100 to make 400. That's a really good risk versus reward. So definitely we'll do this. If we close below the 20 today, I'll do this. And then we'll look at Meta. Anything in Meta here, a little too hot, but not overbought yet. So I'll leave Meta alone. I think it's one of the better looking charts in technology. Amazon, we had the conference here in Vegas just a couple of days ago with the AI bullshit. So I think that's why it's moving higher. But Amazon, I got to take a shot against it here. And it's going to be, since we already above this gap, we opened another one. The close here would be 213, so we're going to be looking at something like 215, 210. Amazon, 215, 210, 136 to make 360. The Google trade offers better risk versus reward, but again, the volatility is down, so I think this is not bad either. So this is what I'm going to think about, folks. Remember when we looked at pullbacks possibilities for the Qs maybe a few months ago? We've done butterflies. That could be another option. So we're just going to do butterflies. So since we're not sure, in the case of Amazon, not sure. In case of Apple, maybe it's a little better in terms of certainty, since the VIX is coming up. But with Amazon, since we don't have a reversal sign yet, we're speculating on a pullback. Maybe the butterfly is a better structure. So in this case, it'll probably be 215, 210. Then you buy the 205. And you don't need to go to the 20th. You can go to the 13th if you'd like. 20th will give you a little bit of better chance that it plays out. Hopefully it doesn't play out too good. And then 210 becomes in the money. But anyways, I think that this is a good expiration date. Spending about 70 to 80 bucks to make 420, that's a really good risk versus reward. So this is what I'm thinking about, folks. Now, Tesla, this one looking different. This one is breaking to the upside, right? So Tesla still has momentum, not overbought. So if you put a gun to my head right now, I would say that you go with the Tesla calls. Even if we want to go crazy a little bit, I mean, depending on how the sentiment is going to hold, what you can do is go a little out of the money with the calls because they're going to hold value. So 400, this is about 9%. So we're going to do, since we're 375, for example, and then we're going to sell the 400. But we're probably going to do it in the butterfly structure. So long call, 400, 375. So we'll probably do the 425. Really good spread since it is 2 weeks and this guy's a higher beta. So you need to give yourself a little bit of a bigger gap than the $5 usually we do in Amazon and Google. I think this is a really good trade, spending 420. Great number, make 2,000. Chance of profit at 30. This is a really good trade here if you want to chase some Tesla momentum because it did break above the resistance. And the daily chart still has a little bit of room before it becomes overbought, and the weekly, a little too hot, but it can continue that momentum until the moment of truth hits. When we say, okay, all of this is speculation about what the Trump policy is going to do for the first buddy, right? We know that's not going to last. But anyways, the margin story becomes front and center once we hit 25. But for now, it looks good for Tesla, at least in the daily chart. Last thing, and I'm sorry it took a little bit longer here talking about all this crap, but Bitcoin, a little higher today, but it reached this resistance, the channel, right? And it kind of pulled back a little bit. And like I said yesterday in the show, it could be just a one-day phenomenon where folks get excited about what the federal chairman said. And then they faded away right away. MicroStrategy is really interesting because it went negative, right? Because, I mean, this is fraud. This is flat-out fraud. There's no reason for you to pay 4 times what an actual Bitcoin cost. Like, it doesn't make sense at all. You like Bitcoin, buy Bitcoin. I don't see the reason of buying this thing. And the fact that Bitcoin went over 100,000, MicroStrategy went negative, it's more of a reason to short this thing. So we'll look for Mr. here, and we'll do something. Let's look at just the regular naked puts, and then we'll expand if we need a butterfly or not. Because butterfly could be dangerous with stuff like this that's higher beta, moves in an erratic way. Yeah, they're not trading higher. Correct yourself. Anyways, here 390, that's about 12% drop. But again, see the premiums are a little too high. MicroStrategy is still high. So here, let's see if we sell the 370. That's 900 to make 1,000. Yeah, my mama didn't run raise a fool here, baby. Let's do something cheaper. That's if you must, of course. You can use any other proxy you'd like. But here, 390, 370. Let's see where the support is, though. You got the 20 moving average at 371. Okay, so that's a good point to sell. How about the 50? That's way too low. 100, way too low. Actual support, forget about the moving averages, would be at the low here, which is 338. So let's begin with the 370, then take it from there. That means you get a 350. So in this trade, you're spending about 144 to make 1,800. But again, this is really higher beta. So if you're going to do it, you probably want to go to December 13th. And you see that it's going to cost you more. Because in a butterfly, the longer the time goes, the higher the probability that the trade goes against you, right? So you see here, right? Chance of profit 17 in the butterfly structure, but you go to the 20th, chance of profit 13. If you're going to go to the 20th, be honest with you, maybe we should do something like this. 350, 310, a little steep. How about 360? You want to leave the same gap in the body of the butterfly, right? You don't want to go with different gaps. Here, a little more conservative a trade, but higher profitability, chance of profitability. 390, you sell the 360, you buy the 330, cost you about 400 to make 2,500. So whatever idea you got from MicroStrategy, I think that the reaction today is just going to sour the sentiment that, look, this is just not a good instrument. If you want to buy Bitcoin, just buy Bitcoin. Why would I do this? Anyways, these are my notes for today, folks, but let's see what you guys got. We'll keep it at the Qs here. The 3 minutes chart. Actually, I'll look at the VIX, since it is the most important thing here. 5 minutes. Okay. Senior. You didn't listen and failed to cut the BITI calls. Well, you know what? Bitcoin is coming back down again, so I'm not saying that the BBITI calls will work out, but we're coming back down. Yeah, you need to see a huge reversal here where we go below 95,000 for those to work out. You can balance it if you think that Bitcoin is going to go higher. It's just pulling back for now. You can balance it by a bullish bet. And then the bullish bet appreciates and makes up for the loss in the bearish bet against Bitcoin. Anyways, Austin, yes, I think that the tide is shifting a little bit because the volatility is so suppressed. You need to introduce it a little bit more. And as we see just a little bit of introduction in volatility, you'll see pullbacks, much needed pullbacks. I mean, some of this stuff just doesn't make sense to me. I could show you RSIs in the 90s right now. Okay, we opened the 230, 260 puts, 230 calls, 260 puts, Jan 17 for a strangle on Apple. I think that's going to be a good trade. But as we talked before, it requires management. So if you think that we're breaking below a certain support, where the 260, right, the 230 calls, excuse me, about to go underwater, it's going to require management in terms of, and I think that you gave me the wrong numbers here. I think you're looking at the 230 puts, 260 calls, if I'm right. So if you're doing the 260 calls and doing the 230 puts, suppose Apple goes down closer here to 235, then probably the 260 calls, you want to manage that and get rid of them, right? You want to close that before you begin to lose value in it. So managing strangle is really important, and we can talk about that a little more when Apple begins to move. And I'll be here, help you out in it. Thoughts, Leo, thoughts on opening 240 Apple and then opening the spread later since the IV. Yeah, that could be the case, right? That could be another smart way to do it. You open right now 240, and then you wait for the implied volatility to go higher. I mean, it's pretty much in the bag that implied volatility will go higher, but it is a riskier approach than opening the spreads right away. But yeah, I'm with you. If you're experienced, if you know the risk, yeah, I like that strategy. Adam, UAL undefeated. Listen, I see what's going on with the airlines. Yeah, I get the fundamental story that airliners are making money because of the dollar and all of that, but this is not it. I can show you, we'll do the reports, okay? I already have that video for the airliners. It's actually Delta versus United Airlines. And I'll show you the numbers. Yeah, there is a good case to make, but this doesn't explain it at all. So as we hit the 25, I think that if the puts play out by December 20, we'll exercise on a short in these airliners. If not, in 25, we'll enter shorts on them. And UAL, the rest of the airliners, these are highly cyclical businesses. And I think part of it, folks, is saying that we're going to see the work-at-home culture being reversed and all of that. I don't believe in any of that. I think that we have travel right now is just going with travel because of the credit card spending. And yes, the dollar is higher and incentivizes people to go to travel and all of that. But all of these will change as the economy becomes more and more challenging. Time goes by, budgets gets restrained, inflation begins to show more and more of an impact. I know that but we can look, when I do the Delta Airlines, United Airlines comparison, I will show you what they've done in terms of increasing profitability. And again, they have to be creative because it's a challenging business. And what they're doing is selling premium seats more, and they're higher margin than those. And the higher income consumer is still traveling. So far, so good for now. But I don't think there's any degree of sustainability here, which will make the airliners, again, on my short list. And I think that if you short them even right now, comes 25, it's almost in the bag that you're going to make money. Because at least it's going to go down to the 70s, if not below that. Okay, let's... Ryan, thank you so much. MicroStrategy may be a leading indicator to Bitcoin as it did the same thing in 2021. Maybe, but MicroStrategy, I think, also has its own circumstances. And even today, when Bitcoin was trading higher, Micro was getting sold. So there are a lot of folks who I think might have taken the hit here, saw the pop today, and saw this as an opportunity to sell. Just get out of MicroStrategy, let me buy a regular Bitcoin, and that's it. I think that sentiment we'll see more where that came from. We might even close the gap right here in MicroStrategy. There's a gap, I think we're going to close that as this sentiment becomes more dominant. That, hey, why would I need to be in MicroStrategy when I can buy Bitcoin? When I can buy, by the way, I mean, look at the how many ETFs you got. IBIT is a really good one. Reliable. BIDO, reliable. Comes from the same stuff that you're buying here. Same companies. So I'd go with BIDO, I'll go with IBIT. I mean, there's no need for me to go MicroStrategy. I think more and more investors are going to realize that. So you can see the phenomenon of Bitcoin going higher, MicroStrategy going down. Okay, folks, bring them on. Anything you got, bring it on. We're going to look at anything you need to look at. Discord, Patreon, whatever you are, just give us the questions. We'll look at them here. Let's see the VIX. Another look here at the hourly chart, see how we're progressing, and no close yet above the important number, right? 1361, but I think we're playing that bull flag. You see the momentum here accelerating. You see it in the RSI. I think we'll see more where that came from. As the VIX moves higher, the sensitive names begin to move down, and they drag the indices down. Not much in the Qs, but more dominant in the SPY. SPY also showing this sort of a rising wedge, right? So you got to be careful here. I think we might go down to the 600. So a trade that could be viable for tomorrow is something like this. So if we go to the 6, tomorrow is going to be the 6. We'll probably want to go with the 600. That's going to be 1.2. So it's a little. If I do 600, we're probably going to do the 9th. And then sell the 600 for tomorrow. Spending 24 to to make 168, but if it goes next week, right, you can make more than that. So this is one trade that I do like as a lotto ticket. More of a viable trade, though, will be something like, for the 9th, it'll be something like 600, 595, right? So you can do a combination. I'll probably do a combination of December 9th SPY puts. I think that we need a little bit of correction here. I'm not being too aggressive, though. 600 is the number I'm eyeing, so we'll do some of those before the end, too. I think some of these lottos will pay out big. A more of a conservative one would be the 605. So if I'm doing something for tomorrow, 605, 600, where you're spending about 75 to make 420. So if you're going to do something for tomorrow, it's going to be 605, 600. But we'll do some of these little lottos in the SPY before the close. I think they're going to pay off. And of course, you got NVIDIA. Every time the VIX moves, NVIDIA should be also impacted. So NVIDIA, I mean, it's trying to rally, but I think this downgrade that we got today in AMAT is significant. And AMAT has a pretty good weight in SOXX. So you see SOXX actually trading negative today. What about the SMH? Yep, negative today. So, yeah, I don't think NVIDIA is going to hold. If the VIX continues to move higher, I don't think NVIDIA is going to hold. It's going to join Apple too. So looking at the map here, folks, most of the chips are down, software pulling back. But again, pulling back, that's probably going to give you some opportunities to buy at some point later on, because it is a really attractive sector right now. The banks rebounds today, go figure, and then you got Tesla, a bit of action here showing up in the dividend cohort, but not so much in real estate. So staples, not so much in real estate, utilities leading, so real estate remains a little peculiar here in the reaction. Let's look at some energy stocks, then we'll look at some of these big pharma here, Merck specifically. And then we'll do utilities. So if we do XLE, we're finding a footing here. Let's look at the daily chart. Apply the Bollinger Bands. I think we're the lower right now. Yep. So we're catching a little bit of support at the lower Bollinger Bands. Exxon is what matters. I think it's oversold. It might get a little more oversold. You always want to check on the weekly chart, right? So yeah, it could drop a little more. So usually I would say, yeah, this is a buying opportunity here, but hold your horses. You need to see something more before you jump the gun, because it could get a little uglier in Exxon before we find the bottom. Now, as the yield-sensitive stuff, critical day tomorrow, whether we see yields going up or down because of the jobs data. But if you're betting, if you're at least having some hedges, you're betting that, let's say, yields will go up because of hard jobs data, and all of the yield-sensitive stuff will go down. But you want to hedge against that. What if we have a soft jobs data and we see yields going down? Then you probably want to have a hedge using XLU. I think it is the better looking among the defensive yield sensitive, because you have sort of a inverse on his shoulder, and the valuations, at least in the individual names, some of the individual names are still pretty good. So the XLU makes a better compelling case for lower yields play. And now, last one I want to look at is some of the big pharma, but specifically Merck. What do you do here if you got Merck? Look, weekly chart. It appears to me that we're going to close above the top, or at least the body of the breakdown candle. And that is considered to be a reversal. If that is the case, we might be heading up to the weekly, 20 weekly average 110. That's going to be by the end of the year. So I think that Merck was a good entry here, and we're just waiting for that weekly close. I think we're going to get it because, again, inverse in the shoulder. Looking so far, so good. Any other opportunity here we see in healthcare? We'll look at Gilead, Bristol Myers, and then Regeneron. So Gilead, this one I do like. I mean, it's trying to change back to positive. It's holding pretty good. It didn't get hit by the RFK Jr. news. Only problem is we have a reversal candle here, right? So unlike Merck, where you're closing above the reversal candle, at least for now, here we don't have it yet. So this could be sort of a bear flag in the weekly, and we head further to the downside. So hold your horses on Gilead. Now, Regeneron was the laggard in the participation in the rebound, but now it's beginning to find a footing. I mean, it's consolidating here for a few days. I think if it wanted to go down, it had plenty of opportunity to go down. So I think this guy's readying for a move to the upside. So keep an eye on Regeneron, and then we have we're going to talk about Bristol Myers. So Bristol Myers, you probably want to add to this position because it is one of the best plays in pharmaceuticals right now in the weekly chart. See, it is kind of consolidating here. It wants to break above the Fibonacci, get rid of the Bollinger Bands. It's just a matter of time before it breaks above the candle here and then settles a little bit at the 50% retracement. Again, it pays a really good dividend, but 4%, and the valuation is really cheap. So Big Pharma, we do like Amgen, Merck, Bristol Myers. We'll see about Pfizer, still not out of the woods. And then we'll see about AbbVie, still needs a little bit of time. Yeah, AbbVie is still not showing that strength to close the gap. Maybe a little bit of consolidation, and if it breaks above the highs, that'll be a sign to buy. Okay, but that's Big Pharma for you. Let's go back to the VIX. Here we go. Now we're beginning to move higher again. 10 minutes. Yep. Showing up a reaction in the SPY a little bit, in the Qs. Apple. See, Apple is the most sensitive. I love to monitor this. Which one is the more sensitive? Not NVIDIA today, but Apple is the more sensitive to the VIX. So that's why it makes sense to begin a short position in Apple right now with the 240 puts. Thoughts on the divergence, Leo, of oil and the indices? Usually they trade together. I'm not sure if you mean the crude oil and the indices as in the SPY or the ETF, the XLE. But right now, I mean, you look at the futures today, the OPEC meeting was the problem. I think that they delayed, right? They delayed the decision to increase the production. It doesn't make sense to increase the production right now. But I think that crude, it will probably head higher if the dollar begins to be devalued. And the dollar right now is too strong. So crude is stuck, and stuck is pretty good. So long as we're not heading down, that's okay. But the thing is, the companies that will benefit from a stuck crude will be the bigger producers. So that's going to be the Exxons, the Chevrons, Shell. The smaller ones will struggle, although natural gas has been hot. So some of the places that have natural gas exposure are doing pretty good too. So right now, to be honest with you, we usually talk about this phenomenon all the time. Do you want to be in the futures, oil futures, or do you want to be in the stock? This is one of these periods where you want to be in the stocks because crude oil stalled. Unless we have a flare up in the geopolitics or more talk about the policy. Right now, folks assume that Trump will increase the production. That's going to be bad for oil. But all of that could reverse. So right now, I think that it is better to just park the money in energy stocks if you're an oil investor than crude futures. Nat gas continues to go higher. I think that nat gas has a seasonality. So, and I mean, look at these guys, right? Every time they pull back, coffee, cocoa. So there are a lot of stuff in the futures to play besides oil, folks. Okay, let's do Pfizer. Yeah, let's do Pfizer. Since we talked about it, let's do Pfizer. Thoughts on Pfizer? Again, possibility, right? But every time we have hope in this guy, it just keeps disappointing. So fingers crossed, but I'll believe it when I see it. And right now, I'm not seeing it. It's still a negative pattern. It is oversold. It's been oversold for a while, but all it did is just a correction within the Bollinger Bands, which you should. You can't have a violation like this. So it corrected within the bands, but there was no guarantee that it's going to continue to slip down. I think that Pfizer will make a better investment, but it needs two changes. It needs to change the CEO. That's going to give some psychological boost for folks to buy Pfizer. And it needs something different than Paxlovid. I mean, they put all of their eggs in one basket. That's Paxlovid. You see other companies like Merck, for example, which has the Keytruda. That's still going on, but they have other drugs that are developing and they're showing up in the growth. I only know that. I'm telling you that right now because over the weekend I was working on another video, which is Merck versus Pfizer. And you see it in other companies. Even AbbVie is now showing, with Rinvoq and all of that, they're showing high growth drugs. Pfizer is the only big pharmaceutical company that's not showing anything new with higher growth. And that's their problem. They need to give us something more exciting than the vaccine and the COVID stuff. And I think that's going to happen. It's just inevitable. Okay, the activists will see the opportunity in Pfizer. They will add more pressure on the management to do something, and I think that's going to happen inevitably for 25. So Pfizer will make a great hold, but it ain't going to be an easy ride. Okay, I am in DJT, 3642 call spread with the expiration date of Jan 17, 2025. What is the max that this trade can make? So I was looking at this early in the morning because it looks really interesting. So DJT, and you got the 36. I mean, it's facing a little bit of the Bollinger Bands, but it is changing from bearish to bullish. Okay, so just a little bit of resistance today showing up, but I think that this trade should work out as we change the momentum. We have, of course, the inauguration coming, right? So I think your expiration date is pretty good. You're 36, you're not too far. You sold the 42, which is the resistance that we got here, at least in my chart. I like the trade. I think it's just facing a little bit of resistance here from the bands, but that could expand. Hit it a little bit of times here, and it's going to expand. Let me look at the hourly, see that we're not having any reversal here. That's a little concerning, but we'll see what happens at the end. If we find buyers here, let's say we close above this gap, at the end of the day, I'll keep it for sure. Because I think it's a rational trade and it makes sense before the inauguration. Okay, is there a benefit to my Apple Strangle versus out of the money calls in the VIX? Yeah, there's a lot of benefit. If you buy out of the money calls in the VXX, either you're timing it correctly, not just the direction and the exact timing where we're going to see a breakout in the VXX, but also the price. You're better off, much better, doing a strangle on Apple. It costs you a little more, but it's going to give you a better trade in terms of profitability. And again, a strangle can look expensive in the beginning, and you think that you're not going to make a lot of money, but the key is in management, in closing the leg that's not working, adding to the leg that is working, or if one leg works, you close it, then you double down on the other one if there is a change in direction. So management makes all the difference in the strangle, and it could actually be a cheap way to bet on movements. So I like the Apple Strangle over the VXX. Ryan, I hope that then answered the questions. That I do like the DJT trade. A little bit of resistance today, but I think we're good. What about AVGO? You have an iron butterfly. 160, 172 and a half, 172. Okay, so that's the put. 160, 172 and a half. Then you have the 185, 172 and a half for December 13. Okay, that's a AVGO makes sense to do these kind of trades. So let's see here. I want to clean some of this stuff up. I mean, if you have the risk right now, I would say the calls more than the puts. So if you look at the calls, you get the 172, 185. Here we go. 172, 185. So yeah, you worried about the calls, right? Because we're changing back to positive. We're above the 20. I think the calls could be problematic. And you have 185, which is, I mean, more than 10 delta in the spread. It could cost you to keep this. And you have it all the way to December 13. Right now, I say you're good to go because you're not seeing a reversal back to positive. Yesterday could have been a reversal candle. And today just we're seeing a reaction of the 20. But here, the high of this candle, I see it at 175.39. I think if we trade above the highs of this candle, and even the open, to be honest with you, it'll be sort of an early warning sign, 173.44. If we trade above that, then you got to do something with the iron condor for the calls. Maybe you want to switch it, but you want to go by the top of the bands, which is about 182, 183, and you sell something such as the 180. So in this case, to be honest with you, when I do iron condor, I look at the Bollinger Bands as my guide, right? Because usually we find support and resistance there. So it'd actually be selling the upper bands, 183, and then buy something above. So it'll be something like this. AVGO and iron condor. Let's go December 20, just sake of argument. I know that this is going to be my boundary, right? Which is 182, 183. So this is what I want to sell. 183. That's not available, so 182 will do the job. Maximum pain, that depends on what your preference is. Some folks would go to 190 because you're okay with $8. I'm assuming that could be the case. Now I'm looking at the lower bands as my target, 155. Let's see if that pays anything here. 155. Not the best payment. So 160 will be a reasonable 160. And then on the put side, they're probably going to go 155 since that's the, let's say 150. Let's keep it at 8. What, 8 for both? So this trade will give you about $300 in credit. But it's at least using the boundaries of the Bollinger Bands and determining where we stop in the Iron Condor. You can play with the expiration dates if you'd like. But of course, the longer you go, the bigger the risk that you're going to get. So the 20th, I think it's a sweet spot. Look at this. Chance of profit, 56%. So it's pretty much in the bag that you're netting $300 from the trade. But right now, like I said, if you see it trading above the top of this candle, you got to do something with these spreads for the Iron Condor. Maybe change it to what I got right here. If you go down below the 20, I think you're fine because your puts 160, 172 and a half. The puts here, 172 and a half is a little, so you're kind of stuck here. You know what? I'd rather that you change the trade altogether. I'd rather you go with this right here. That we close that trade, Iron Condor, and go with this trade right here. And give you credit above $300 because 172, I mean, that's in the money. You really don't want to open the Iron Condor in the money. It's just a little too tight. Okay, let's do Okta. I got some Jan 85 calls. Do you see it up close to 90 near term? Still good point to add. And then defense. You see it out of favor till Jan. Let's begin with Okta here. Okta is doing okay, and again, the results were fine. The problem is with Okta, it's a little too hot outside of the daily upper Bollinger Bands, and it's already overbought. So we might see a pullback and a better buying opportunity. Now you have Jan 85. That's in the money already. Look, I'll leave it up to you because if you exercise right now, I think that you're probably going to get a better price. It probably goes down to 83, 82. But as far as the expiration date of January, can we be above 85? Yes, we can, because we can do a pullback and then come back up in Jan. We'll be above 90. So that's a possibility. I'd rather keep the calls, not exercise them right now, because I think if you want to buy the stock, you'd get a better price at the 83, 82 level. So that's Okta for you. We'll stick with it because, again, weekly chart. Forget about the daily. Daily is a little tight, but the weekly chart is now positive. We have a break, and I think we're continuing that break all the way to the upper bands, if not challenging here the reversal that we got from the last report. Now, as far as defense, we look at Lockheed Martin. I think that without having the clarity in the policy and who's going to be defense secretary, I mean, we don't even know who's going to be the secretary right now. So, and until we get that, and that's going to happen in the month of January into February, we're not going to get stability. But the good news is we're getting discounts on the defense contractors. And I think that once we get to next year, there'll be an opportunity to buy here in all of these defense contractors. I mean, Raytheon doing a little better, I think. Yeah, Raytheon holding a little better. NOC, a little bit on the weaker side, but it is showing a similar look as Lockheed. The only problem is JD or GD, General Dynamics. That one having a bigger problem, and I would not recommend it, to be honest with you, because it broke trend. If it held the trend, I would say okay, but it broke trend, so it's Lockheed, Raytheon, Northrop. Jerome, you have the 22 puts for Intel December 20, about 10 times profits. Good for you. You just sold 90% of the position. Is it worth keeping the remaining 10 as a lotto, or simply sell it and move on? How would you manage it? Okay, so 22 puts in Intel. So let's do this here. We don't need this. Goodbye, goodbye, and goodbye. You have the 22, that's in the money. Now we're trading at 21.17, right? So you have about $143. You probably got it really cheap, so that's why you're up. But here's the thing. Let's say that we keep it as it is and the price is stuck at 21 something, right? You just go back to next week, and now you're down 3% from this value right here. But you're beginning to see deterioration of value. You go just a tick higher, and now we're losing 24, 26, right? So I think that if you achieved your goal from a trade, you're making about 1,000%. You got to book the profits and look for the other one. Look for another trade, because right now Intel, if you look at the chart, maybe it's a little oversold. But it might break higher. So I think that you've achieved your target from the trade. Congratulations. Let's book it and find a new trade. XHB appears to be dumping today. XHB, I'm with you. XHB, yesterday we talked about the weakness in home builders, and I just don't see good things happening for them. I know that when yields go down, of course, we want to pump them. The algos would buy, as they did here. That's all algorithms. You see the volume going higher. But at the end of the day, fundamentally, they don't make sense. So I'm actually thinking about shorting Lennar, just opening a short in Lennar, because it's going to break trend. It's going to take the 50 weeks moving average. And I think that I'm looking at trying to brainstorm what is a good scenario for a home builder at this point, at this stage of the economy. I can't find any really. So I think that the home builders will make a great short, and I will think about shorting Lennar. And then maybe keeping Coles and Toll Brothers as a hedge, just in case when we get to earnings season, one of them could be still good, like Toll, could be still good, better than the others. But yeah, they're definitely a short. Tamara, hey Mav, how would you approach trading via your retirement account? What strategies are more effective? Okay, so in my retirement account, I'll let you know what I did in my pension, right? So you can only rotate from one investment or ETF to the other, and it was all in the SPY. All of the retirement, my pension was in the SPY. But I talked to some advisors that I respect, and then I said, look, I'm worried about when the big caps correct, right? When this AI mania fizzles out, because NVIDIA, Apple going down, just these 2-3 names, Microsoft could erase a lot of these gains really fast, and then I'll be underwater for all the stuff that I bought right here. So in a retirement account, I switched to the RSP, because that way, at least I'm not really relying 100% on the big caps. There's going to be damage, that's for sure. But I think that the RSP, looking back, historically speaking, and any equal weight, doesn't have to be the RSP. Each firm has its own equal weight. But usually the equal weight recovers faster. Right? You see it here in 2009. It recovered fast. There was a reason behind that usually the heaviest weighted sectors, after a crash, they take a long time to come back. And you've seen them back in the RSP cannot go back to the 1999. But you can see the contrast of, let's say, the Dow Jones, if we go back to 1999. Expand this chart a little bit so we can see it. I don't know why we have this, but here's the Dow Jones. This is 87, excuse me. It's too old. Here's the .com, right? So if you look at the Dow Jones Industrial Average, I mean, it actually went down in July, but it came back up in 99. 2000, you get the crash. You see the Dow Jones held up pretty good. Now, plug in the NASDAQ, you see a different story. NASDAQ got hammered pretty good. To see the percentage points, right? I mean, this was the mania, but from the top, you see the Dow Jones held pretty good. Then recovered faster later on, right? It recovered, it went positive faster from the top. And NASDAQ stayed negative. Dow Jones became positive right away. This is what usually happens when you have concentration in one sector and bubble in one sector. Now we have it in one sector, technology. That's when we have a crash in technology. It's going to take a long time for it to come back. But you'll see commodities, you'll see other sectors in the S&P moving higher, and this is why I do like the RSP or any equal weight as a better holding in any retirement or pension fund account right now. As also, I did GLD, so I moved to both GLD and RSP from the SPY. GLD is about 20%, though. I'm putting about 20% GLD in physical gold. The 80% still in the equities market, in the equal weight, though. Okay, but one important thing in a retirement account, you really don't want to rotate too much it's not just the fees and all of that. You don't want to rotate too much in a retirement account. You just want to do it once in a while. And I think that right now is the right time to switch from a regular index to an equal weight. Okay, regarding your pension, why not long short RSP SPY? I can't shorten my pension. You can't really shorten a pension. You just have to buy something and you rotate from one to the other. So the only choice I got is just rotate the RSP. Then in my individual account, I can short. And that's going to be my hedge against the pension. Anyways, let's look here what's going on with the market, the VIX. Let's see here with the hourly chart. I think we're going to break, folks. I think we're going to do 1361 and head higher. So it looks to me that the VIX is just way too cheap, and folks are going to notice that it's way too cheap, and really great opportunity to begin hedging portfolios. If you have AMD, for example, you got to hedge. It's the cheapest hedging we've seen, which makes it, by the way, cheapest puts that we've seen. But again, as folks begin to hedge, VIX goes higher, and we see a little bit of impact here. Let's look at Apple. Yep, let's stick with that 240. NVIDIA, another sensitive to the VIX, but NVIDIA is catching a bid now. 146. I don't know why they're catching a bid, why they're chasing NVIDIA at this point. It goes hand in hand with Bitcoin. There's sort of a animal spirits going on. But it doesn't make sense at all, especially if the VIX is going to head higher. Another thing we want to look at, of course, before we close is the IWM. You want to see where the IWM and the Russell 2000 will close. And we'll do a trade before the close on the IWM, the SPY. I will post the Apple trade right now, but this is pretty much what I'm thinking about today. I will leave it to the jobs number tomorrow. That's going to be really important. And after that, we'll open up the path for more clarity. What if you could short and do RSP SPY? Would you put that trade on 2025? Looking for longer term holding with lower volatility. So what you're talking about here is, if I'm understanding correctly, it's, for example, owning one ETF like the RSP, then shorting the SPY. That can be counterproductive though, because if the big caps go down, both of them will go down because the weight is still huge, but one will go down with a lesser magnitude than the other. That's the idea in a pension fund or in a retirement account, that you want to minimize the damage at this point. And anything that you buy right now, because you're continuously buying in a pension or in a retirement account, I don't want to buy at valuations that don't make sense to me right now. In a market that I know for sure, you introduce just a little bit of trouble and we're probably not going to see these highs for a long time. So the idea here is not to go long, short the indices or hedge by going one versus the other, but rather to go with where the loss would be minimal in the case of a crash. That's my thinking about it. Now, RTY and Qs, yeah, that's a bit too risky because you're betting on a rotation here, on a soft landing kind of rotation. And somehow AI falls out of favor, but the small caps become favorable. And I just don't see that happening. I think if the big caps go down, there's probably no way the small caps will survive, because that's going to have an impact on the economy when the big caps go down. SMH, MicroStrategy, one more look. Yep, that's still weak. Let's see BTC. Are they selling BTC? By the way, didn't Putin come out yesterday and said that he likes Bitcoin? Yeah, I think that I don't think they're gonna let Bitcoin go higher if Putin likes it. So, interesting rejection, but it's still in a bullish channel. So we'll see what happens. But folks, we'll just keep it here, leave it at here. You know what to look for right now. So you got your VIX, right? Watch the VIX. If indeed you get, for let's say in the hourly chart, you see a break above and a close above 1361, the odds would say that the VIX at least will continue to move higher, and you'll see it moving higher by the end of the day because we have preparation for the jobs number. And if there's a problem with the jobs number, you'll see even more buying of the VIX, and we might be back at 1415. And that's going to give you a pullback in the market. I mean, the odds right now are becoming more favorable to that scenario. The VIX comes back up, and then the sensitive name, Apple, comes back down in a correction and drags the index a little bit down in a mini correction. So Apple or SPY puts make sense now more than, let's say, the last couple of weeks. So we'll leave it here, folks. But we'll be back again in the closing hour. We have a few questions here. Let's address those. I opened Palantir. March 21st, 2025. 50 long puts with longer expiration dates. What do you think? Can I catch a good move on it? Palantir, I mean, you have to understand one thing about Palantir. But whoever bought Palantir for the year, they have no incentive to sell. I mean, it's insane right now. Doesn't make sense at all. I guarantee you, I'll cut my finger live on television or YouTube if this holds, right? We're going to go down and correct here in Palantir. This is going to be a $40 to $30 stock again. But since nobody wants to sell right now till the end of the year, either there's an event that's going to force the selling to happen, and that's going to be if we have a surge in the VIX for a fundamental reason. And then let's say we cut through the 60s. Now a lot of folks are getting underwater who entered recently. They stampede to the exit and push it back down. But absent of that, you're probably not going to see that move till after next year, January. So when we get to January, you're probably going to see Palantir moving. So if you have the March 21st 50 puts, I think that's a rational play on it because you're giving yourself time. And the little drips higher here that we're seeing, not going to bother you in the short term. So I think it's a good trade to keep right now. And all you need is just a little bit of crack to the 60s, and the trade will become profitable and have a higher degree or higher odds of forking out. I'll stick with it. What are the expectations for the jobs report tomorrow? How would you hedge against a really weak job number? So if the job number is weak, the best hedge would be the TLT, right? The best hedge will be buying bonds because yields are going to go down big. So we'll see the TLT breaking out. We will see probably the XLU also moving up. But I think the TLT is more reliable than the XLU because stocks can react negatively to a recession or any weakness in the jobs number. But bonds for sure will react positively. So it's the TLT, no doubt about it. The thesis was if they go down, SPY will go down more than this RSP. And if they go up, RSP will outperform. So make money either way. No, you're right in the thinking, right? But in a retirement fund, it doesn't make sense. In an individual account, yes. But in a retirement account, it doesn't make sense because, again, usually they're going to move in both direction, one way or the other, together. And if you have a long and a short, it could minimize your gain. It could also exacerbate the loss. If they go down together and you have a short, you have a long, one loses value, one gains in value, but do you get it correctly where you short the right one and you long the right one? See, that's the problem here. It gets really complicated. But in an individual account, yes, it makes sense. Leo, thank you so much. And Blazing Baba, is there an entry point near the future or would you rather go with the EEM, FXI? I like BABA because I think it's the biggest weight anyways in these indices. But right now we know what's going on with the Trump administration and all of that. We need more clarity. I think people are hesitating in buying Chinese stocks, even though the valuations are pretty good. But they're worried about the policies by the administration. EEM gives you a little more exposure outside of China. So if you want to enter something right now and you're worried about Chinese exposure specifically, but you think the dollar is going to go down and you want to go with the EEM, then do that better than BABA. FXI doesn't make sense. I mean, FXI, it's the same as BABA. So EEM is better than BABA right now until we get more clarity. Then I think BABA will outperform. Google, you seem to be less optimistic than others. People will see it over 200, perhaps after a split. Would you consider a long call at the next dip if it happens? Google, the problem with Google is, yes, the revenue is pretty good right now, but we talked about why in the third quarter for YouTube and the advertising. The problem with this company is it's under the microscope it doesn't matter which administration we got. It's just too big. It has too much of an impact in the economy from a monopoly perspective. 70% of the search engine owned by Google, and I mean, even in the phones, you see what they're doing with paying Apple and all of that. So I think that the problem with Google here has been always the regulatory risk, where investors don't like it. If we break above the highs, if we have fundamental news that, let's say we see that there's an expansion in revenue outside of the election season that we got in the third quarter, okay, now there's a fundamental case. If you can convince me that the regulatory risk is non-existent and the administration makes peace with Google, then sure. But with these risks looming that, hey, we might have peaked in the revenue growth, and we have the regulatory risk right now, I don't think Google is going to hold, because you have other alternatives. You have Meta, you have other things. And this is why I think Google is among the weakest in the big caps, at least right now. Do you think we finish lower today? De-risking for jobs report. I think so, because, I mean, you have NVIDIA, so you have to watch for that. I don't know why they're buying NVIDIA right now. It doesn't make sense to me, especially with the VIX coming back up. But monitor NVIDIA. If NVIDIA comes back down, and then the VIX, I think the way it's looking right now, it wants to hit higher. Right? If it closes above 1361, hits the 1388, yeah, we're going to be negative at that point. But NVIDIA is the sticking point today. So you got Apple cooperating, coming back down, the big caps for the most part, getting soft a little bit. But NVIDIA, for some reason, now participating. And I don't know what is that all about. Hey, Mav, do you think there's any call option plays for Okta? Not right now, to be honest with you. I'm not going to do it right now, because you don't want to enter calls when you're looking like this at the Bollinger Bands, right? You're already outside of the boundaries. You're probably going to correct a little more to 82, 81-ish, and then we'll find an opportunity to buy some more calls. So I'm actually looking here to not even buy at 85, sell at 85. So I'm looking for the 85 calls that I sold on my shares in Okta to expire worthless. That could be a possibility tomorrow. We'll head down a little more, and then I'll be buying more calls to add to the position. So that's coming, but we need to correct a little more here. We need to trim a little more, and then we'll do the calls. Okay, folks, let's just leave it here. And again, if you have any more questions, anything at all, just let me know. We'll do a chat session again in the closing hour. And by the way, your Top Guns questions in the channel in Discord, that's going to be taken care of too this weekend. But anyways, let's just wrap it up right here, folks. You know what to look for. VIX, watching the video. But Apple is the best opportunity right now if you're going to play a move in volatility. With that, folks, we'll be back again, closing hour. Thank you for joining us for this session. Appreciate and love all of you. Take care and good luck for the rest of the day.